Hey guys, Mike Perna coming at you just with a quick video. Again, thinking about buying, thinking about selling, looking for a home evaluation, considering a career in real estate, we've got links below for all of that. Or reach out to me directly at 248-714-0980. I'd love to help you, your friends, your family, your coworkers with any or all of your real estate needs. Now, today we are talking interest rates and what does the future hold? Where's our crystal ball? What does that look like, right? So we've got some really interesting data coming out of the Mortgage Bankers Association I wanted to share with you guys. Number one, interest rates, of course, are exceptionally low right now going into December. Well, we're in December. And going into the new year, which is awesome. We're seeing interest rates at around a 3 or even a sub 3% level in many, many cases. I actually saw a gentleman get a home loan for 2.75% the other day, which is outstanding, right? We have seen interest rates take just an absolute nosedive. And again, I know we've talked about it before, but just to recap, whenever the economy goes even a little bit sideways, the Fed drops interest rates because that is one of the bullets it has in the gun to fend off bear markets, to fend off recessions, depressions, all of that, right? There's that, there's also spending, and then there's also lowering taxes. Those are your three basic things that the Fed can do, and they've kind of done all three at this point. Fair enough? Fair enough. Now, that said, let's talk interest rates. So one nifty thing happened a few weeks ago. There was a blip on the map, and we saw this in the stock market when the Dow went and it actually crested 30,000 points. The S&P 500 did, which is really cool, but yet an arbitrary number really doesn't mean anything. You know, didn't change my life any, at least. Let me put it that way. But I will say this, the reason why the stock market had jumped is because of news of Pfizer, Moderna, and then a couple of other companies that are coming out with these vaccines, which is awesome, right? 90%, 94.5%, 95% effectiveness, blah, blah, blah. All those things, right? And with that confidence came a stock jump. In addition to that, what a lot of people did not see, with that confidence came an 1/8 of a point interest rate jump. Go figure, right? And then, of course, the next week, another study and another report came out about highest number of COVID cases, highest number of COVID deaths, and all of those things, and interest rates fell right back down. So right now, what we're seeing is that interest rates are just that volatile, that even just a little bit of good news can change it from a week-to-week basis even. So the Mortgage Bankers Association has now come out with their official prediction based on vaccines and things and all those other wonderful things. The unemployment rate continuing to go down, all of those things. 2020, we're seeing an average of a 3% interest rate if you go through most of the year, right? Take out January, February. But once we saw those interest rates start coming down in March, they believe that the interest rates are going to be 3.3%. And don't forget, and one thing I want to say is, for validity's sake, 9 out of 10 times they are correct over the next 2 years as their projection on interest rates. Just putting that out there. So they've got a pretty good track record. And it's what they do for a living. 2021, 3.3%. 2022, they're seeing interest rates, or thinking interest rates are going to hit somewhere around that 3.6%. I personally think it's going to be a little bit higher than that. We are recovering more rapidly than it feels because of the things that we see out there, such as restaurants being closed and things like that. Those are things that we see in our day-to-day life. The things that we don't see is all of the people that are gainfully employed because, they're office people that are now working from home, of course, but they're people that we don't necessarily run into. Like, I don't run into the engineer that designed the seat in my car. But he's there and he's working and he's drawing a paycheck, and a good paycheck, right? And those are all positive things that influence the economy. When I drive down the street, I see the restaurant parking lots empty. So that is what I see. And then 2023, we're looking at hitting a 3.9. I think it's gonna be more like a 4.1% interest rate. What does this all mean? Long and the short of it is, interest rates are not gonna stay low, guys. So if you're looking to make a home purchase, now is the time. Today's the day. Let's get out there while your buying power is 50 to 100,000 more than it was just 12 months ago, right? And here's what I mean by that. So with buyers, it's all about monthly payment. And I see this time and time again where Yeah, and I'll use myself as an example. Hey, if somebody's willing to give me $1 million loan and all I have to do is pay back $1,000 a month, I'm buying $1 million house. It's just that simple. And I think most of us are kind of in that boat, right? It's the same thing. So while your buying power is high, so let's say that you had gotten approved for a $300,000 loan just 12 months ago, just in 2019. In today's world, most people that got approved for $300,000 then can get approved for $360,000 to $400,000 now. That is how much further the buying power is extended with similar or same monthly payments. I'm not even kidding. And that's what's led to the run-up in the market. And if you're considering going on the market anytime in the first half of 2021, anytime from June 1st previous, anytime you're considering making a move, I definitely want to get on the other side of the phone with you for a couple of reasons. One, mortgage times have started running long, right? Two, it's getting a little more difficult to find that next property, so I want to make sure that we're appropriately planning enough time in the future to do that. And then three, we want to make sure that we're giving you the right advice as soon as possible to make sure that we are getting the absolute highest value, highest dollar for your property we can get, right? And try to put you in that position of a multiple offer situation to get you even better terms and longer terms. I mean, a good example of this is we have a gentleman right now that, and again, he's in the financial sector. Oops, low battery. Sorry. He's in the financial sector. And what he is seeing is, hey, I need to go and get my $800,000 house on the market and gone because next year is not going to be as advantageous with higher interest rates and with more inventory on the market. And that's what he's saying, right? And then again, this is what he does for a living. So what we ended up doing was we did go on the market. We did get an offer within the first couple of weeks. We got actually a great cash offer for him, which was awesome at 97% of asking price, which is amazing. And a lot of that went to, we also staged his home for him and those types of things. You know, he called us in advance enough that we can do a bunch of different things to push value. Now, here's the awesome part. They're not moving till March. He's got 5 months to move. 5 months. We were able to negotiate for him to find his next property and move into it. Think that's enough time? Yeah, absolutely. Is the family going to use all 5 months? No, they're not. But it's there in case they need it. And that's the important thing. We will over negotiate whenever possible for every one of our clients because we want to make sure we're getting the best we can get as far as price and terms for our sellers. And honestly, guys, same thing goes for buyers. Because this person, we're turning around right now and we're working a negotiation with this seller on their next property. They're downsizing. And we are really working those terms and pricing hard to make sure that we are doing the best that we can in this hot market, right? So again, questions, comments, anything you got. Feel free to reply to this email if you're seeing this on email. If you're seeing it on YouTube or Facebook, give me a call or shoot me a text directly, 248-714-0980. Thank you again, everybody. And again, I truly appreciate your business, your referrals, and so does my team. Other than that, make it a great day.